When reports emerged that AC Milan was the subject of a takeover back in 2016, it appeared that the Rossoneri was just the latest and biggest acquisition in a slew of big money club purchases emanating from China. No one really knew who Lee Yong-hong was, but Silvio Bunga Bunga Berlusconi's Fininvest company quickly agreed a €740 million takeover with the mysterious Chinese businessman anyway. But not so fast. The deal was held up over doubts over Lee's actual worth. A fake bank document was discovered during the takeover, further delaying the deal. In the end, it went through, but only after the last-minute intervention of Elliott Management Corporation, a US activist hedge fund that lent Lee over €300 million to close the deal. It was, as it would turn out, the deal that would eventually end his short tenure as the owner of Milan. Later investigations by the Financial Times and the New York Times discovered that Lee might not be all that he said he was. Offices for his mining empire, which appeared to be a network of companies officially registered in other people's names, sat empty, with landlords complaining that the rent had not been paid. Lee always maintained that his wealth was real, but that few in the West understood the complex nature of how business was done in China or the difficulties of getting money out of China and past the government's strict capital controls. Still, after an initial big money splurge on players, some €200 million in fact, Milan's on-field performance barely improved, whilst their financial situation deteriorated. UEFA banned Milan from European competition over the financial chaos within the club. When Elliott's loan repayments were due, Lee was unable to pay back a €32 million tranche. Interest was set at an eye-watering 11%. He now owed over €400 million in total. After aborted talks of a sale to a number of interested parties, including the American Ricketts family who own the Chicago Cubs baseball franchise, and the Russian oligarch Dmitry Rybolovlev, the majority shareholder of Monaco, Elliott moved to seize AC Milan, effectively becoming the club's new owner. But what is Elliott Management Corporation? Who are the people behind it, and what does the future hold for AC Milan? Well, the answer to those questions can be found in part in the long and controversial 41-year history of the company and its founder, Paul Singer, a 73-year-old former lawyer who's been one of the US Republican Party's biggest donors in recent years and has been described as both ruthless and as an unrepentant cheerleader for the 1%. He's gained a reputation as an activist investor that has extracted huge returns, whilst at the same time being labelled a vulture capitalist that has exploited bankrupt countries and some of the poorest people in the world through litigation that many view as immoral. After a career in law, Paul Singer started Elliott Management in 1977, using over $1 million in seed capital from various friends and business associates. Over the years, the company specialised in buying into distressed assets, aggressively taking control of the company and then restructuring it and selling it on to maximise returns for shareholders and its own investors. Often that would also mean huge layoffs and slashed pensions. Think Gordon Gekko and his "greed is good" speech from the film Wall Street. This approach has been phenomenally successful for him and his investors. By the start of 2018, EMC held $39 billion worth of assets and employed a staff of 400 people. Over the lifetime of the company, investors have enjoyed a 14% return, and the secretive Singer, who insists that anyone who works for him avoids social media or even post their picture anywhere online, is worth over $3 billion, although that figure is likely to be much higher. Whilst achieving this success, Elliott Management and its subsidiaries have earned a reputation for being ruthless, aggressive bullies. According to a 2017 profile in Fortune magazine, several CEOs and board members deposed from their companies thanks to Elliott's investor activism detailed how private investigators were employed to uncover dirt on their private lives. It was alleged that their adult children had also been harassed. Elliott Management later denied this, saying that the assumption and the implicit allegations that Elliott sent anyone to contact the children of these executives are completely false. But by far the most controversial business practice of Elliott concerns the buying of sovereign debt. Elliott did this with countries in deep financial trouble, buying the defaulted debt of Peru, Congo-Brazzaville, and most famously Argentina for a fraction of its cost before then demanding payment on the full amount. When Argentina defaulted on just over $130 billion worth of loans at the end of 2001, it caused a deep economic depression that saw the currency devalued, savings wiped out, and forcing almost 60% of the population into poverty. A deal was struck with over 90% of Argentina's creditors that would require the country to pay back 1/3 of the principal amount. but not everyone agreed. A small group of investors, led by NML Capital, a subsidiary of Elliott, had bought some of that debt at a knockdown price. Instead of accepting the deal, NML blocked it by litigating in the US for full repayment using increasingly unorthodox methods. At one point, the company tried to have an Argentine Navy vessel impounded when it was docked in Ghana. The then president, Cristina Fernández de Kirchner, even switched to a commercial airliner for travel as she feared her presidential jet would be impounded. In the end, after 15 years and when a new president came to power, a deal was struck. $5 billion would be paid to hold out Vulture funds, as they had been labelled in Argentina. Elliott got almost half of that sum and made an astronomical profit. A few months after the repayment was made, Cristina Fernández de Kirchner was indicted on unrelated corruption charges. Unsurprisingly, these tactics have been lambasted by politicians and anti-poverty activists who argue that money desperately needed for healthcare, education and infrastructure in some of the poorest countries on earth is instead redirected into the pockets of people like Paul Singer. Former British Prime Minister Gordon Brown called such vulture funds morally outrageous. According to the UN, vulture funds are responsible for diverting public funds into questionable forms of debt service, which should better be used for fighting poverty, improving public healthcare or education, and boosting the debtors' economies. The type of litigation Elliott and Paul Singer specialise in has been banned in the UK and Belgium. The funds themselves argue that they are doing the developing world a service by holding corrupt and profligate politicians to account. Often, they argue, it's not that a country can't pay, but it's that the politicians are stealing money from public coffers and that they won't pay. Such aggressive tactics have made Elliott filthy rich. But what will this mean for AC Milan? It's unlikely that the company will be in charge for a long time, even though Singer is a soccer fan who supports Arsenal. Elliott's MO, once a company is in their control, is to appoint competent leaders that can sail the ship back to profitability. Paolo Scaroni, the former deputy chairman of Rothschild Investment Bank, was appointed the interim CEO. Before Lee's default, Scaroni had been quoted in the Italian media as saying that Elliott had no interest in football club ownership and that Milan would simply be auctioned off to the highest bidder. I don't think that Gordon Singer, Paul Singer's son who runs Elliott's London office, wants to be the president of a football club, he said. Arsenal's Ivan Gazidis, who is close friends with Singer's son, was reportedly approached about taking the permanent role. Arsenal later said that Gazidis would be staying at Arsenal. Still, they injected €50 million into the club to stabilise its finances and curry favour with UEFA. It seemed to do the trick. The Court of Arbitration for Sport reversed AC Milan's European ban, partly because the current financial situation of the club was now much better following the recent change in the club's ownership. Whether it was by accident or by design, Paul Singer now has AC Milan on his hands. Or, as the popular Wall Street blog Dealbreaker drolly puts it, Paul Singer Argentina's his way into a soccer team, and he's not likely to leave without a substantial profit.